Hey, what's up, guys? Welcome back to the Retire Early Investment Club, episode number 3. Big day in the stock market today, Monday the 12th. Lots going on. More market manipulation, maybe Trump saying buy the market, you want to buy stocks, it's going to the moon. I'll wait for you guys to kind of filter in. I'm still working out the best time to start this live. We've done 8:30 in the morning Eastern time, right at market open. I'm kind of thinking 10:30 or 11 might be better for people also watching from the West Coast. Let me know in the comments what you think about the best time to start this. Hey, what's up, Jay? I knew I could count on you, buddy. We got Eduardo in the house as well. Jay watching from Halifax, Nova Scotia. So guys, a lot of things are coming to fruition very quickly. Things that we talked about in episode 1, like the tariffs potentially being rescinded, trade deals being made, driving stock prices to the moon, especially on the stocks that were most severely affected downward, like Nike. So we talked about Nike. And I don't want to toot my own horn, but Nike is up 6.5% today. It's early. Evencia, hey, what's up? Good to see you. So what we're seeing here is this big run up. US Bank Corp's another one we discussed, up 4.44% just today. And a lot of this is on trade deals and tariffs potentially being either rescinded or renegotiated. So the news was negative. Stocks went down. And then now things are softening up. There's trade deals being made in the UK. So certain companies are reacting more strongly than others. As you may have seen in the thumbnail on this live stream, we're going to talk about Tesla. That's a hot topic always. Starbucks is up almost 6% today. We talked a little bit about Starbucks. So guys, let me know in the comments any stocks you want me to cover today. I kind of wanted to discuss the intrinsic value of Tesla. How much is Tesla actually worth? I think that's an interesting topic. Tesla's up 7.2% today as we speak. It's trading at $320. Just recently, I was sitting with my friend Bjarne from Denmark. Howard, what's up? Good morning. Beautiful Monday to you as well. Got the coffee in hand, guys. Cheers. So let's dig in. Recently, I was talking with a buddy of mine, Bjarne from Denmark. We were having coffee and we were discussing Tesla, and it was trading around 220 a share. It's back to 320. Hey, what's up, Paul? You as well, my friend. Vamonos. So guys, I wanted to discuss Tesla a little bit, starting just right out the gate, not to keep you all waiting. Morningstar has a fair value of, I think, $250 a share. Kathy Wood from the ARK Investment Fund. Nice, thanks for that update, Howard. No wind and virtually zero seaweed in the hotel zone. Water is clear. Awesome, glad to hear that. Yeah, there was no sargassum in the water yesterday at Playa 72. And Cocoa Beach, I hobbled down there on one crutch, and it was absolutely gorgeous. If I wasn't hurt, I would have gotten in the water. I'll be in there swimming soon. Tesla is trading around 150, now more, 150 times earnings. I'm doing well, Anna, thank you. The foot pain is actually getting quite a bit better. I'm a pretty tough monster, and got some peptide injections that I've been doing as well, which has helped a lot. So good to see everybody. We have a nice group here so far. And do let me know, guys, what time should I be starting this live stream? Right at market open, 8:30 Eastern, or should I start it a little later in the day to give time to people on the West Coast? Let me know. Hey, Jersey, joining from Europe, just arrived in Warsaw, sitting on the bus and watching your live. Awesome. That's so cool. Watching from Warsaw. That's awesome. Let me know, guys, any stocks you want to discuss. Like I said, I'm starting here with Tesla. I think it's significantly, it's the most expensive on a price to earnings multiple. It's the most expensive stock that I know of right now. It's trading around 160 times forward, or 160 times earnings and around 100 times forward earnings. Ontario, Canada, Jay Blair. And so I wanted to discuss some alternative stocks to Tesla as well that pay that pay dividends, that are significantly undervalued. And one of those is Merck. I know that's controversial. It's a pharmaceutical company, but Tesla's controversial as well. And then guys, this is meant to be a group discussion. Jim says he'd like it a little later. Okay, like what time are you thinking, Jim? Good to see you here, Jim from Texas. You thinking like noon? You thinking more toward market close, and we can that way summarize day one of the market? I'm all ears, guys. Hey, Trevor, what's up? Good to see you, my friend. So the big names, guys, the theme today, the big names are up huge. Amazon's up 7.26%. Tesla's up 7.27%. Very, very interesting day. Google's up a little bit, but Google's still struggling based on the news that came out about the Safari search terms actually dropping for the first time in the last 2 decades. But I watched an interesting video recently about Google and the different parts of the business and how much each one is worth. YouTube, Waymo, the cloud business. The growth is there, guys, for Google. And I think the negative news on the search engine portion of the business is already priced into Google. So we've talked a lot about buying Google, and I'm putting my money where my mouth is. I've been buying Google, especially when it has dipped into the 140s. I think it's a fantastic value. But some higher yielding stocks that we talked about, Nike and US Bank Corp are up 6.5% and 4.5% respectively today. So I think it goes to show that you can get some pretty big gains in some more boring, slow growth companies. Stone Cold Yao says crypto XRP is going up also. Guys, feel free to discuss the crypto amongst yourselves as well. I'm not a crypto guy. I've never owned it. I don't know what it's worth. But that doesn't mean we can't discuss it today in the live stream. I got a comment from Stacy Noble. I'm not sure, Stacy, if you're here, but she said, hey, you would heal better if you were in the Speedo. So the way I'm filming this, am I wearing the Speedo? You don't know. Am I even wearing pants? You don't know. I am wearing a shirt, you know that. But I got a kick out of that comment. That was like the comment of the week on my $4 doctor visit video. And someone also mentioned that I have to hook up Ava for helping me out. I am taking her on a trip to Oaxaca. We're going surfing, so she's going to get wined and dined, and we're gonna surf and have a lot of fun. Maybe check out Masunte Cipolite as well. So Jim says not too much later. Thanks for the tips. I got Google. They're working on AI. Yeah, I mean, Google's a huge AI play, and Waymo has active driverless taxi trips. What, like 150,000 trips a week or something? Don't quote me on that, but it's a functioning segment of the business, albeit a very small segment. It is growing. Linda, I'm doing pretty well. I had a little pain last night, a little trouble sleeping, but hey, I'm here, I'm present. Got a nice strong espresso. That always helps. How you doing, Linda? Cuéntame. So some of the other stocks that I'm noticing too, like railroads, Norfolk Southern has gone up 6%. But is this manipulation? Is this just, oh, let's pump the world full of bad news? Like, oh, more tariffs, more this, more that, negative news stories. And then, hey, let's hit them with some good news. Donald Trump outright saying, hey, buy stocks. You want to own stocks. Because it's a rocket ship. And then all of a sudden, oh, we're going to have trade deals and tariff deals. Is this just blatant manipulation? Let me know in the comments what you think. Awesome. Just got home from vacation in Playa. Good morning, Rambo Travels. Yeah, on the up and up. Always doing something. Always staying positive. And these live streams help keep me sharp and keep me engaged. And it's also my way of kind of trying to give back and answer those questions that you all have as best I can. I know a lot of you want the early retirement path as well, and you're on that journey. Rob says, is now a good time to buy in the stock market? Look, Rob, what I always say and what I always do is I look for individual stocks that are undervalued compared to their intrinsic value. So is the stock market as a whole, like say an S&P index fund, a buy right now? I really don't know. It's hard to say. But I think there's some individual deals out there. I think PepsiCo, Campbell's, I think Merck, I think those are two sectors that are hated right now because of the RFK changes. But I think companies like Merck and Campbell's and PepsiCo will be just fine. I also think Google's a pretty good value here at $158, about 15.8 times forward earnings. The search engine portion of Google still had 10% year over year growth, yet it's priced at that portion, that segment of Google's business is priced at about 10 or 11 times earnings. So it's priced as if it's going to just lose. And the reason that is people are afraid of ChatGPT eating into the search terms portion, the search engine portion of Google's business. Bollocks. Let me know what you mean. Please do elaborate there. But I think there's some good values out there, guys. Hopefully that answers your question, Rob. Let me know in the comments what you guys are buying or if you're holding cash and you're waiting. But I think these companies are dynamic and they will be just fine. Massive market caps, 200 billion plus in the case of Merck and PepsiCo. Campbell's is a slightly smaller company, but I think people think that Campbell's is just a soup company, but they've got Goldfish crackers, Kettle chips, Pepperidge Farm cookies. It's got the snack and the chip aisle on lockdown. Mutual funds for steady growth of my savings. I'm not sure which ones to look into. If anyone has some good mutual funds, please do share that with Rob. Rambo says it's always good to have money in multiple areas, real estate, stocks, high yield interest, etc. Yeah, there's nothing wrong with diversification, but I also think back to, Charlie Munger talked about diversification. And I'm kind of in that boat. If I see 5 or 6 or maybe 10 really good opportunities over the course of a year, I will focus in on those 5 or 10 companies in a big way. But that's just me. You have to have conviction in what you're buying. I think for most of us, yes, spreading around into ETFs, mutual funds, money markets, real estate, whatever it may be. I get exposure to real estate through real estate investment trusts, REITs. So I really like American Tower, AMT, and I also own Realty Income, ticker symbol O. And those tend to rebound and do very well when interest rates come back down. Yes, Jim, hey, good. Right on cue. You just mentioned O. Yeah, that's where I get a lot of my real estate exposure is Realty Income. It's kind of in a unique situation where if you look at the 5-year chart on Realty Income, it's only up 7%. It's basically sideways for 5 years. But I think that Realty Income is one of those stocks that's going to recover and do very, very well when interest rates come down. It will be kind of a perfect storm for Realty Income. So, but for now, it provides monthly income. Realty Income pays a monthly distribution for those of you who don't know. And so, yes, I do own it, and I get that money coming in every single month that helps pay the bills. I do think there's potentially 20 or 30% upside on the shares when interest rates come down. So any part of a good diversified portfolio, speaking to Rambo Travels, your point, will have some exposure to real estate, no doubt about it. Now, as far as Tesla, guys, do we have any Tesla fans in the house? Anybody own Tesla? Anybody thinking about owning it? I can't really make a case for it here at these levels. I think it was slightly intriguing when it was around 220. But still, when something's trading at like 150 times forward earnings, it's pretty tough for me to multi yield max funds. They pay weekly dividends. Nice. Thanks for sharing that, Chris. You as well, Rambo. Yeah, getting back to the grind. Always appreciate your positive attitude. Thank you. You as well, my friend. Looking forward to seeing more from you and the misses on the YouTube channel. Yeah, Jim says too rich for me on Tesla. Same thing here. How much can we ask about how much you paid, Charlie, for Tesla in 2022? Let's dig into Tesla without further ado. So I know that CFRA has a price target of 260. Morningstar has a fair value estimate of 250 on Tesla. Interesting, the Cybertruck. Yeah, no doubt. So I'm going to pull up some financials on Tesla, some reports as well. But I think what we would have to see for Tesla to grow into that valuation would be earnings going from $2 a share to about $15 a share, to put it very simply. And so what would have to happen for that? Well, Kathy Wood came out on CNBC the other day and gave a 5-year price target of $2,600 for Tesla, which I think is criminal. For those of you who watch like the Joseph Carlson show on YouTube as well, he scoffed at that, and I think he's spot on. I think that's ridiculous. Kathy Wood has underperformed for the last 5 years. She's underperformed the S&P. She's underperformed other funds. It's been atrocious. And then what she does is she goes on CNBC and just pumps up the biggest positions in her portfolio and says it's going to 10x in the next 5 years. And then she just puts in some keywords like humanoid robots and hopes that people will be like, oh yeah, humanoid robots, and they'll run out and buy the stock. Rode in a Cybertruck and loved it, but what happened, Jim? I'd love to hear. Yeah, ARK ETFs have underperformed substantially, Duffy, and that's kind of what I'm speaking to. You could have simply bought an S&P index fund and strongly outperformed any of ARK's ETFs. So that's a big issue. And then when she's being allowed on CNBC and allowed to say things like, oh, price target of $2,600 a share, $2,800 a share, I just think that maybe that's a sign for all of us to not watch CNBC. No offense, CNBC, but if you're going to let people come on and say and just pump their biggest holdings, that's not analysis. She didn't do any fundamental analysis. She didn't really talk about the current valuation. She just gave a price target and started talking about humanoid robots. Ridiculous. So, I mean, I'm not saying that Tesla doesn't have really strong revenue and earnings growth, but other companies out there have really strong revenue and earnings growth and cash flow growth as well, and they're priced at reasonable valuations. So, forward earnings, according to CFRA for Tesla, $2.90 a share, and we're going to take that and do the math here because Kathy Wood decided to not do any math at all on CNBC. So we'll do the math here. It's trading now at about 300, we'll call it $320 a share. Divide that by the forward earnings of 2.9, and we get a forward price to earnings of 110. That's a recipe for disaster, typically, to pay 110 times earnings. Very Yes, Peter, good point there. Tesla is very dependent on monetary policy. If we get a rate cut this summer, it will spike. If we get an end of quantitative tightening later this year, it's going to fly. Yeah, and that may be, but I still don't know how this thing deserves a price to earnings multiple of 110 on a forward basis. And then we look at current earnings. We got 320 a share divided by current earnings, and that gives us a current price to earnings of 160. Hey, what's up? New Zealand in the house. Sid, good to see you. So we're just discussing Tesla right now, and the valuation's rich. I think most of us can agree on that. 160 times current earnings, 110 times forward earnings. Generally, the share price follows earnings. So the question really is this with Tesla: are earnings actually going to grow at that rate to where it'll grow into the valuation? That's the real question. And if so, how? Where are the growth catalysts? Tesla's only got 48% institutional ownership. CFRA has a 3-year projected EPS CAGR of -3%. Certain places are boycotting the Tesla. My home city of Portland, Oregon, for better or worse. Portland, RIP, rest in peace. Portland's been a disaster, but certain places aren't buying Teslas, they're boycotting Teslas. Certain cities are vandalizing Teslas. There's a lot of uncertainty surrounding the company. Morningstar has a narrow moat rating, uncertainty rating of very high, and a fair value estimate of $250, meaning it's about 25% overvalued according to Morningstar. And really the highlight here, the headline on the story on Morningstar says Tesla shares surge on US-China tariff pause. So all this is people reacting to the news. They're ignoring the valuation of Tesla. And Bjarne, if you're watching this, I would love for you to chime in. I know you're in Denmark, so the time zone, it might not work out for you to be here. You probably disagree with me on a lot of this. You're my buddy. I love you, but I try to buy value, and I'm having trouble making a case for this valuation on Tesla. I would love to hear the bulls chime in and say why. Why will Tesla's earnings grow 5 times, 7 times, and grow into the valuation, and when? How long until that happens? Just doesn't seem like a value play. Love the company and products, Jim says. Yeah, good point. Well, it's a fun one to follow. It's a fun one to follow for sure. But when you have these dips and spikes, a very high beta stock. So I mean, it traded in the 400s all the way down to the low 200s. The 52-week range is $167 all the way up to $488. So if you can handle the volatility and you can buy the dips and sell the peaks, potentially that's a strategy for Tesla stock. Hola Noemi, what's up? Me da gusto verte. So some alternatives to Tesla, if I may, would be maybe Google. And I could make an argument for Merck as well. Merck is not only in human medicine, pharmaceuticals, but animal medicine and health and vaccines. And so Merck's a company that's not talked about a lot, but it has tanked back down to basically being sideways over the last 5 years. And you take the forward earnings of 9.92, and let's just compare the price to earnings here, guys, before we even look at the growth of Merck. But there is some growth there. Hey, Becky and Jim, Key West. Good to see you guys. Thanks for the Nike slides. I actually had a dream I was going to Key West last night. And I was flying to Ronaldo. It was a wacky dream, but we'll talk more about that later. So, first of all, Merck pays a substantial dividend. Right now it's yielding about 4.3%, I believe. and we take the current price of $79 a share, divide that by the forward earnings, 992 according to CFRA. You get a forward priced earnings of 7.96, guys. So you're getting this mega cap, $200 billion cap stock that pays a healthy dividend that's well covered for under 8 times earnings, yet you're paying 110 times forward earnings for a company that pays no dividend and has massive uncertainty. Jim, it's possible, but we have to remember too that some of these companies like AbbVie and Merck sell their drugs all over the world. These are global distributors and producers of pharmaceuticals. So yeah, Charlie, not following the crowd, that's a big one. Being a contrarian has been huge for me. Guys, one example of that is I was buying oil stocks during the pandemic when everyone else was buying electric vehicle stocks. Keep in mind, none of this is financial advice, but I looked at the fundamentals of the oil stocks and realized, hey, eventually people are going to start driving and flying again. Oil's not going to stay at $13 a barrel forever, and Chevron's trading at $70 a share. And Chevron's the creme de la creme. ExxonMobil's right up there as far as the lowest cost of production and the safest company as far as balance sheets. But I also bought BP, I bought Shell, I had Exxon, I had Chevron. So I had 4 oil companies in my portfolio when everyone was buying Tesla. Tesla's trading right back where it was 5 years ago, or it was at least up until a couple days ago. But meanwhile, I took 100% gains on Chevron in just 1 year. So being a contrarian and not following the crowd is a really good theme. Thank you for mentioning that, Charlie. Mukul Anand, where are you from? I'm from Portland, Oregon. Jesus Huerta, do you invest in stocks only or do you hold any crypto? I own 0 crypto. I've never bought it. I've never understood how much it's worth. Great question. I know a lot of people who have made a lot of money and lost a lot of money on crypto. My problem is that it's only worth what somebody will pay you for it after you buy it. And you don't know that. Yes, I sell covered calls. I actually recently sold a covered call on my Merck position because I had a feeling it was going to double bottom. It climbed back up to about $95. I sold a covered call on Merck and it went back down. I kept the cash for selling the options contract and the shares. And then I've been selling cash secured puts on Nike. I've been pretty vocal about that. I recently sold another put on Nike at $57, and now it's trading up about 6 or 7% today. So every single one of these put options that I've sold on Nike has been free money because Nike has just done nothing but go up after I sell the puts. I sold one at 55. I sold like a 4 contract put option at I think 54. And then I sold a couple more contracts at 57. It's been really good income. So I don't just rely on dividends, guys. I do utilize options. Mike McFarland, hey, TheRopeMonster, I hope you're healing up after your accident. Market's got a bit of a bump this morning after the announcement of a China trade deal. Yeah, and Mike, what do you think about that? And thank you very much. I'm healing well, but what do you think about that? Is this just manipulation? Did the administration know all along that they were going to play hardball and then just soften up and start this talk of deals? I think the powers that be know exactly what would happen with markets when they're threatening these long-term tariffs. I came out 3 weeks ago on episode 1 of this and said those tariffs could be rescinded at any time, and if and when that happens or when there's even talk of it, markets will spike, and especially the stocks that were most negatively affected by the tariffs, such as Nike. Hey Banger, what's up? Watching from Southern Ontario, nice. Yeah, Jim says, got Nike, wish I'd bought more. Is it too late to add to the position? No, I still think Nike has a lot of room to run. I think it's significantly undervalued, and I think Nike's one of those that's going to react very strongly to any kind of trade deal with China. So I think there's room to run. And I want to remind you guys the fair value estimate by Morningstar for Nike is $112. I came up with a fair value of about 96 when I did a discounted cash flow model. and I did a dividend workup as well, and I think Nike's easily worth 96 conservatively, and then I think that Morningstar's workup was a little less conservative at 112, but I still think that's a fair price target and fair value estimate. And the headline here: tariffs are potentially disastrous, but could be rescinded at any time. So Jim, good job picking up some Nike shares. It's not for the faint of heart, but when it hit the mid 50s, it was just kind of like, okay. I was discussing Nike back in February when it hit the upper 60s briefly and went right back up to 82. And a friend of mine is a professional investor, and he was upset that he wasn't assigned the shares. He sold some cash secured put options in the low 70s, and they weren't assigned. And then all of a sudden it's trading in the mid 50s when you fast forward, and now the low 60s. And then all of a sudden the whole world is too scared to buy it, except for some of us like Jim. Yeah, so Mike McFarland says, I do think the tariffs are a bit of a manipulation. Hasn't changed my strategy at all, as I'm in it for the long haul, dollar cost averaging. Good. Yeah, I think there are huge rewards for those who stick with their strategy and stay in the market, stay in high quality businesses. Now guys, I will have to keep this one short because I'm going to have to elevate my ankle and get some ice on it. For those of you who don't know, I had a bicycle accident, and I'm really trying to heal as fast as possible so I can get back to some level of normalcy. So we usually go for about an hour on these live streams. I'll probably wrap it up here shortly, but I wanted to bring to your attention just what I think is happening with these tariffs and the trade deals. I think it's one of the purest forms of market manipulation that I've ever seen in my life. And I think it was clear as day when all the news was negative, the tariff news was negative, shares of high quality businesses were plummeting into value territory like we've never seen. I want to put it into perspective before I go with Nike. And what I want to talk about is the price to earnings right now versus the 10-year lows over the last decade. So you can get an idea of what kind of deal we're talking about. Tesla tiny homes could be big. Yeah, Tesla has no limits to how they can branch out, but these things take time to be accretive to their overall earnings. So we have to keep that in mind. But that's a good point about the tiny homes. So forward earnings for Nike at $3.25, and it's trading around $62. 62 divided by 3.25, guys, gives us a forward price to earnings now at this time on Nike of 19. And over the last decade, if I look at the 10-year lows, the 10-year low was in 2017. It was trading at a price to earnings of 19.5. Recently, guys, when Nike was at 53, 54 a share, we had a forward price to earnings of like 16 on Nike. That's unheard of. So Jim, to thoroughly and properly answer your question, a forward price to earnings of right at 19 on Nike, yes, I still think it's a value. You could add to the position dollar cost average until you get it to the size you want. And it sounds like you got a really good entry point, Jim. Would you mind sharing your entry point? Is it a new position for you? Did you buy it in the 50s? Because I think it was a no-brainer in the 50s. And I think under 70 a share, Nike's still a really good value, no doubt. Solid balance sheet, 11 billion in cash, 11 billion in debt. My channel is not necessarily a finance channel. It's retire early themed, but mostly I do Playa del Carmen, Mexico City content. I bring value where I see it. So whether it's a good taco stand or a fish house, I update folks on the beaches. I try to answer any questions that I get in the comments. Recently, I tried to begin to demystify the Train Maya. So I went on a Train Maya trip to Valladolid, SM Blogs. Hopefully that answers your question, and welcome to the channel, my friend. We're just a community here trying to make each other better and grow. But I like to demystify the unknown. And the Train Maya trip was a lot of fun. I also did some content in Valladolid showing just how beautiful, clean, and safe that place was, showing some of the best cafes and restaurants. Yeah, Squack, what's up? Yeah, I'm well, I'm doing well, I'm on the mend. And so guys, yeah, that wraps up my thoughts on Nike. I still think it's a good value. And I think it has a lot of room to run with these trade talks, trade deals, and tariffs potentially even being just overall completely rescinded. One of the big takeaways today is I hope that you guys can figure out that being a contrarian is huge. Oftentimes I find myself buying the bad news and selling the good news, and a lot of people are doing the opposite. Oh, there's good news, we're gonna buy. Well, a lot of times what happens is everybody floods into a stock and it becomes overvalued on good news. So Trump saying, oh, the stock market's a rocket ship to the moon, buy stocks. We're in trade talks with China, we're gonna come up with some type of deal, and stocks go to the moon. I'm generally buying in the bad times when all the news is negative. And that there's literally a strategy called buy the rumor, sell the news. So I think the big takeaway from episode 3 is think about how you can be a contrarian, don't follow the crowd. We talked about US Bank Corp, we talked about Nike in previous episodes. We've talked about buying undervalued stocks. US Bank Corp was significantly undervalued just a couple weeks ago. And they pay a very, very nice dividend. It's the 5th largest bank in the US. And if you look at the 1-month chart, US Bank Corp is up 16%, guys. So people often ask me, how do you get big gains on these boring companies? Well, buy when the news is bad, as long as the fundamentals are good. US Bank Corp was at $37 a share less than a month ago, and now it's trading around 44. So not only are you getting that dividend, but you've got 16% gains. So with the aggregate dividend, with the dividend factored in and that, you've already got over a 20% return for US Bank Corp. Jim Anderson just shared his entry point on Nike, 58.73. Bravo, my friend, congratulations. 58.73, fantastic entry point. I think 1 to 3 years down the road from now, you'll be looking back at that and be pretty happy with that. I don't know for sure, but I think Nike will turn around just fine. We got to keep in mind this was a stock that was bid up all the way to what, 100 and I want to say in 2021 it was $179 a share, which was way over. It was ridiculously overvalued. But I think reversion to the mean for Nike would mean somewhere around $92 to $95 a share. So plenty of upside there on Nike. Good to see you as well, Mike. We're just now wrapping up. CPI data comes out tomorrow. Market will probably go down. Buy stocks on down days, not up days. Great advice, Chris. Yeah, being a contrarian, you see blood in the water. Even if the blood is your own, you buy. You see red ink. As long as the fundamentals of the company are good, you buy. I don't expect Nike to go up 6 or 7% back to back days. I think there will be some type of give and take. You have to be patient when you have a cash position and things go up. You don't want to get caught into that FOMO, that fear of missing out, and then buy on the really strong gains. I do agree with you there, Chris. Absolutely. And then real estate investment trusts are down today. Realty income's down 1.5%. American Tower, which is another high quality business, is down 4.8%. I'm not saying that either of those run out and buy them. American Tower, I was buying in the 180s and the 170s recently, but it is interesting to see, the one sector that's really sharply down is real estate. So we talked a little bit about oil versus electric vehicles, being a contrarian in that sense. It's really all about timing. You look at which sectors are beaten down the most and then maybe find the highest quality business within that sector and analyze it. See, is it a buy? Is there a margin of safety? Is there a durable competitive advantage? Buenos dias, Jamie. Good to see you here, Jamie McDonald. So ask yourselves those questions. Which sectors are beaten down and why? I mean, right now you could say consumer staples, consumer packaged goods, foods, and healthcare, health insurers. United Health, of course, is being sued over the CEO assassination by shareholders. Merck, Pfizer, those are all down. And Bristol Myers has been beaten down recently. So you want to look and find which sectors are beaten down, and then find the highest quality businesses in those sectors and determine yourself or with your financial advisor's help, are they a buy? And that's one way to be a contrarian. Don't buy the sector that's already outperformed, buy the sector that's underperformed that's going to outperform. So I'll leave you guys with that thought right there. Thank you guys for stopping in for episode 3. See you guys in the next one. Appreciate you all. Happy trails on your journey to early retirement and financial freedom. TheRopeMonster out.